Welcome to Magnolia Bank Academy. My name is Dan Mason, and in this video, we're going to discuss automated underwriting, what it is, and why it matters. So buying a home is one of the most stressful activities you can undertake in your entire life. So psychologists have actually studied this and found that the stress incurred with finding the right home, arranging a home loan, dealing with inspections, finding moving companies, turning utilities on, turning utilities off, and every other aspect of buying a new home is one of the four most stressful events you can undertake in your entire life. It's right up there with the birth of a child, getting married, or even death of a loved one. So yeah, it's a big stressful deal. So the last thing you want to do is wonder if your home loan will actually be approved and have it upend the entire apple cart as you're going through this big stressful mess. This is why automated underwriting exists. So what is automated underwriting? An automated underwriter is a computer underwriting system, and it's able to analyze your income and your credit and your assets and every other aspect of your ability to qualify. And it'll issue a full-blown loan pre-qualification right up front. So it'll say, yes, with their income and their credit, they qualify for this loan amount, at this rate, this much a monthly payment, really nails down all the details for us right up front. And that way we don't have any surprises at the end. So how does it work? So it's real simple. We simply take an application, and you can even do that right now. You can click on the link right underneath this video and complete the application online, or give us a call. We'll take an application over the phone. You're going to fill in the basics, name, address, employer information, that kind of stuff. We'll then send you a list of the couple things we need from you. Income documentation and bank statements. Income documentation, really all we need if you're a wage earner, we just need W-2s and pay stubs. If you're self-employed, we're going to ask for 2 years tax returns and then 2 months bank statements. We'll then complete the income calculations. We'll look at your W-2s and pay stubs, figure out what you make on a monthly basis. Same thing if you're self-employed. We'll take a 2-year average of your tax returns. We'll input that into the system, and then we'll also do a hard credit pull. Yes, it will be a hard pull, not a soft pull. When we're doing a loan pre-qualification like this, we want to make sure you actually qualify. And a soft pull is really kind of more of a snapshot of your credit. It doesn't really give us a full-blown credit report. A hard pull is necessary to run it through the automated underwriting system. So we input the data, we run it through this computer underwriting system, and it will issue a full-blown loan pre-qualification for us right up front. And it'll tell us precisely what you can qualify for, or if you can't qualify. So the nice thing about the automated underwriting systems is if it has a problem. So let's say we're running a purchase loan with 5% down. And it says, well, there's some iffy credit issues. There's some spots and the debt to income ratio is a little high. It will issue a referral. It'll say, no, it does not qualify. So then we go in there and we tweak it. And so maybe we change it to 10% down. Or maybe instead of applying for a conventional loan, we change it to an FHA loan. We rerun it through the system, and those changes will tell us whether it approves it or not, nails down the pre-qualification for us right up front. And as you probably could guess based on what I just said, the automated underwriting system does work for conventional loans, FHA loans, and VA loans. All three of those loan types will be run through this automated underwriter, and a full-blown loan pre-qualification will be issued up front, so there's no surprises at the end. So let me give you an example of how this works. This is an example of some DU findings. So there's two main government-sponsored enterprises that aggregate home loans, Fannie Mae and Freddie Mac. Fannie Mae has an automated underwriting system called Desktop Underwriter, or DU. Freddie Mac's automated underwriting system is called LPA, or Loan Product Advisor. They're fundamentally the same thing and work basically the same way. This happens to be an example of DU approval. So as you can see here on the top here, this is what we always want to see, this approved eligible. That means we got ourselves a loan here. So we ran this thing through, and this is a great example because this is someone who was purchasing a home and they had some iffy credit. They had some spots on their credit in their past that was dragging down their credit scores, making it a little tougher to qualify. So we initially ran it through with 20% down, and the automated system would not approve it. Luckily, they were in a position to put a little bit more money down. So you can see that we ended up with them putting 30% down. We ran it through its 70% loan to value, which is, of course, 30% down payment. And so with that 30% down payment, we got ourselves the approved eligible, and they were able to purchase this home. Same thing would apply if we ran it through with 20% down and again, the automated system didn't like it. We could flip it to an FHA loan, rerun it, and it'll tell us right up front, yes, it works FHA, or it doesn't work conventional, and so on. The other great thing about automated underwriting systems is it'll run a valuation model. And it'll look at homes in the area, and if it's able to ascertain the value of the house based on comparable sales in the area. For example, if you live in a tract home community, all the houses are very similar and tightly knit, and there's been plenty of sales activity in the area. The automated system will run a valuation model, and if it's able to ascertain the value of the house, it'll waive the appraisal. It'll say, yeah, we can tell that this house is worth X amount of dollars, so no need to get an appraisal. We save you the money. We just waive the appraisal outright. And that appraisal waiver will come in on page 2. In this case, you can see this file did not get an appraisal waiver. We would need to get an appraisal done. And situations where you're in more rural areas, maybe you live on 5 acres, your nearest neighbor is a mile away. There's just not enough data for the system to be able to waive the appraisal. So you're not going to get appraisal waiver in those situations. But if there's a whole bunch of comps, a whole bunch of sales activity, we'll often get those appraisal waivers. So that's how automated underwriting works in a nutshell. And whether you're looking to purchase a home or refinance, the whole point with automated underwriting is that you don't want to work with a lender that can't close your loan any more than we want to work on a home loan that we can't close. With automated underwriting, it issues full-blown loan pre-qualifications right up front, so there's no surprises at the end. So if you have any questions about how this works, feel free to give us a call, shoot us an email. We're here to help. Or again, click on the link below to start an application, and we'll get your loan pre-qualified using the automated underwriting system. Thanks. Have a great day.